Good morning. Good morning. Welcome back to the Bloomberg Equality Summit. Romaine Bostick here, anchor for Bloomberg Television, here to continue on with that theme of this year's summit regarding inclusion in this age of disruption, now or never. And we really want to turn forward on that theme right now and talk about some of the ways and shine a light on this idea of supporting entrepreneurs, supporting entrepreneurship. And I'm pleased to say we have with us this morning Shu Nyatta. He's a managing partner over at SoftBank. He's actually the co-lead of a big multi-billion-dollar Latin America-focused technology growth fund. However, more importantly to this discussion today, he's co-spearheading an effort by SoftBank with a $100 million opportunity fund targeted at founders of color right here in the U.S. Also joining us today, Jemma Wolfe. She oversees launch with Goldman Sachs. This is a big initiative as well, a $500 million initiative started a couple of years ago, designed to help early stage companies with diverse underpinnings increase their access to capital and facilitate a little bit of connections there. And I want to start with you, Jemma, on this note specifically, because amid all this attention that we've had this year from corporations and VCs and other funds to focus on racial equality, to focus on gender equality, it has to be sort of recognized that there were a lot of initiatives out there that predated the current turmoil that we're in. And one of those initiatives appeared to be launched with Goldman. Can you tell us a little bit more about it?
Romaine, thanks for having me. It's a really complicated time, and I appreciate the opportunity to have this discussion today. As you mentioned, we started Launch with GS over 2 years ago, and we started it because we believe that this is good business. So Launch with GS is our $500 million diversity investment strategy. And as we enter our third year deploying capital, we've invested 330 of that original $500 million commitment. And we really focus on three main things. One, we invest directly in companies with diverse management teams. Two, we invest in private equity and venture capital funds with diverse leadership. And three, we're building out and supporting the ecosystem with events, content, resources, and connections. And we really think that those introductions can go a long way in supporting entrepreneurs.
And so when we talk about that support of entrepreneurs, you have this program started a couple of years ago. Earlier this year, SoftBank made a big splash in the news with the announcement of this opportunity fund, specifically designed to target Black and Native American and Latinx entrepreneurs. Shu Nyatta, you are sort of the co-head of this effort. With that, can you tell us a little bit more, I guess, about how this came to fruition? Because if I remember correctly, it went from idea to inception pretty quickly.
Yeah, it was very reactive, actually. So we at SoftBank are global technology investors. We've been doing that for a long time. We haven't really been as focused on issues of domestic U.S. Social dynamics really at all. And this year we realized we had to change that position. So in June 3rd, I believe the day was, Marcelo Claure, who was my boss and one of the top three guys at SoftBank, said we have to do something. It can't be a press release. And so this was on a Monday, and on a Wednesday we were on CNBC announcing the fund. So in 48 hours we got out in front and announced a $100 million fund, and it's focused just on the U.S., just on Black, Latinx, Native American founders. And 3 or so months in, we have already a portfolio of over 15 companies.
And so just the willingness for people to embrace these ideas and to embrace them from the perspective of, I guess, a business initiative. I'm curious, Jemma, with regards to the types of people that the entrepreneurs that sort of look to be in your program, and more importantly, maybe some of the companies and other folks who want to also sort of help with those programs, are you finding enough of a reception amongst those sort of people to sort of collaborate and to continue building out the mission of what Launch with Goldman is supposed to be?
When we started the initiative over 2 years ago, we honestly didn't know what to expect. We knew and had a strong view that investing in diversity is good business. We believe that diverse management teams outperform, make better decisions, manage well through crisis. But when we announced, we were overwhelmed by the opportunity set. There is such a strong pipeline. We're actively reviewing opportunities, and we feel really confident and excited about what's out there. The other thing is that there's a lot of data that backs this up. So if you look at companies in the top quartile for gender and racial diversity, the numbers just speak for themselves. So on the racial and ethnic diversity front, companies in the top quartile are 33% more likely to deliver industry-leading profitability. And on the gender side, companies in the top quartile for gender diversity are 21% more likely to outperform peers. And so once you start seeing those numbers and you see the pipeline and you see the opportunity set, I think a lot of people, and we're seeing this now, are seeing that this is a good business opportunity and this is returns driving investment strategy.
When you look back, though, Jemma, sort of prior to when you started launch with Goldman, there were always questions that were raised about corporate diversity, whether it was necessary, why companies needed to vote any sort of significant amount of resources or time to it. What changed in the ability to sort of get that data and to get the type, I guess, reinforced knowledge that there is sort of an actual cost benefit to pursuing these sort of diverse initiatives?
I think you really need to see examples and see it play out. So the data's been out there for a while, and we have a very strong view that diverse teams do outperform, but it goes beyond the numbers. You need to see real, tangible examples. And one of the things that we think is really important in order to see long-term change in the venture capital ecosystem is to have more diversity on the check writing side of the table. So investors who are starting funds, making decisions, connecting with entrepreneurs, joining their boards. And we've seen this play out. So one of the funds that we've backed is called Define Ventures. It's a digital healthcare fund started by a very talented investor named Lynn Chow O'Keefe. And it's funny because sometimes I try to call her and show her investment opportunities in the space, and she's already seen all of them. So there's nothing that she hasn't seen. A lot of people call her for her expertise. And it just happens, if you look at her portfolio, in her search for the best opportunities in the digital healthcare space, over 40% are led by diverse teams. And so I really do think that we need more examples. The numbers speak for themselves, and I think people are starting to see that.
Shu, so with regards to putting to work the money SoftBank has committed to this opportunity fund specifically, how easy has it been so far, I guess, to identify new opportunities? And what's sort of the general strategy here for, I guess, making sure that all that money gets invested?
Everyone talks about a pipeline problem. That's a common phrase you'll hear when people talk about any kind of minority groups needing funding or starting companies. We've seen no such thing. So since we announced this fund, we've looked at over 600 different companies very quickly who came into the funnel. Similar response to what Jemma described. We got overwhelmed by the interest, which was great. We love that. And we funded almost 15 companies. This is in 3 months. And we hear a lot, there are no companies to fund, but I think that's because people don't look in the right place. So the myopia of the industry is to us quite obvious at this point, having been doing this for 3 months, because we're excited about what's to come. And the point I'd make is we can talk about statistics and success metrics and all of that. The founders are very important to highlight. So Silicon Valley lionizes the outsider, the person with a chip on their shoulder who has overcome all odds to start a company with a clear idea and a lot of drive to succeed. If you abstract those qualities, they apply to a huge range of minorities in the US, because that's what you have to do to be a minority in the US. So these founders are in some sense very perfectly suited to starting new companies, just people don't look for them in the right place. So our strategy is to find them, to have an open door, have them come in, give them a good hearing, help them succeed, and nothing more complicated than that.
Yeah, not complicated. Is it, Shu, is this, how should I put this? Is this philanthropy or is it business?
It's absolutely business. The only way you do discredit to this idea is by making it philanthropy, because the goal is to attract more capital, and capital follows returns. Capital doesn't care about anything else, really. And we want to prove that there is no trade-off. Just like Jemma said, this is good business. And we couldn't be, if you look at the list of companies that we're already investing in, they're across all kinds of categories, across all kinds of industries, and they're all high quality ideas with good entrepreneurs. So the goal is absolutely to have a very well-performing venture fund, because without that, you haven't really achieved much.
All right, we're speaking here with Shu Nyatta and Jemma Wolfe, and we have a slide. We want to bring the audience into this discussion here because we are incorporating Twitter polling into this summit and into these live sessions. And the question for this session is, what do you think is the biggest obstacle facing diverse entrepreneurs? And you can see the responses here up on your screen for our viewers here. It said that 47.3% said access to funding, about 20% said bias in the business world, 27% said lack of mentorship, and only about 5% said lack of representation in key industries. And Jemma, I want to focus on that last one there because I thought it was interesting that that had the lowest percentage of concern here. Shu sort of mentioned this idea of a pipeline and what's in that pipeline, what may not be in that pipeline. That type of response seems to suggest that maybe the pipeline isn't really the problem here when it comes to some of the inequality issues.
We completely agree with that. There's no pipeline issue. We see it every day. Our team is very busy, and there's a level of enthusiasm across Goldman Sachs and with our clients where people want to bring us opportunities. I think one thing that I will mention that's interesting about that poll is I think that the network gap is one of the biggest contributors to the investing gap. And what I mean by that is that warm introductions are so important in this business. And it's not just the warm introduction, but it's also setting that person up for success. What do they need to know going into that conversation? There was a study a couple years ago out of the UK that showed that a warm introduction is 13 times more likely to lead to funding than a cold introduction. And what I like about this is it's something that we can all do. If everyone wants to know, particularly those who are responding to the poll, how can I help? Well, you can make the introduction, open up your network, and then also help with the backstory. How can you position that person for success as they walk into that introduction?
Well, I mean, well, then on that note, Shu, an audience member is sending in a question at this moment on that topic now, and basically saying that, well, if the door is open, as both you and Jemma suggest, the question is, how do you find that door? If you don't necessarily know the right person, or if you're not involved in Launch with Goldman, sort of how do you find that door, Shu, where you can sort of get that opportunity to shake a hand and pitch your deal?
Yeah, it's for us very simple. You either go to opportunityfund.com or you send an email to opportunityfund@softbank.com and you tell us about yourself. Attach your pitch deck for your business, describe what you're doing. We will look at and consider everything. That is what we're here for. So it's very straightforward in our case.
It's straightforward. There are also issues being raised about whether, I guess, when we talk about that pipeline and we talk about these doors being open, as to whether enough people in the investment community and in corporate America recognize that. There were some comments that took Twitter by storm today. It was based on some comments that the CEO of Wells Fargo, Charlie Scharf, apparently made a couple of months ago to employees about having trouble filling some of the leadership positions with Black and minority candidates because, in his words, he didn't feel that he said that there was a, quote, limited pool of those people. He has since apologized for those comments, we should point out in fairness. And it was part of a broader discussion that he was having within his own company about doubling the number of Black leaders. I'm curious as to what the message is for people out there, for executives out there that maybe don't necessarily believe that that pipeline is as full as maybe you believe. Jemma?
So I think one of the dynamics that's actually really interesting that our team is talking about and that we're watching is whether the current environment and video conferencing, Zoom, Skype, if it's truly an equalizer, or if in fact it's limiting the opportunities and it's leading to more investing gaps. And what I mean by that is we know there's a strong pipeline. Shu mentioned it, we've seen it. There are so many opportunities to invest in really, really strong industry leading companies across really a variety of sectors and industries. In the current environment, I'm hearing on the one hand from some entrepreneurs that video conferencing is removing some barriers to get to that funding. They don't have to fly out to Sand Hill Road every month. They don't have to worry about the costs and the time of being away from the business. They also don't have to think through, do I need to go to drinks the night before the pitch? How do I navigate this? On the other hand, we're seeing some VCs who are saying it is really hard to do business right now without meeting face-to-face with the entrepreneur. And so we're observing this. And honestly, I don't know what the answer is. And I'd actually love to hear from people on what they're seeing and what they're hearing. But I think it's important that we be aware of this so that we can ask the right questions around what's really leading to the investing gap. And Shu mentioned it, and I'll say it again, it is not a pipeline problem. And we do think that this network gap is a contributor to the investing gap.
There's a
And then
nuance
Shu,
here
with
on the pipeline question, yeah, which is as you move into the later and later stages of a company, there are fewer companies by founders of color. So the bulk of our pipeline that we've seen is earlier. And I think this gets to Charlie's point, is you have to start younger. You have to build the mass at the base to try and get leaders 5 or 10 years from now who you believe can succeed you at Wells Fargo. And for us, it's about funding companies early and helping them grow into bigger companies. You can't just expect big, magnificent companies to exist because of these structural limitations that have persisted for a while. So the pipeline is rich, but the pipeline is young. And we just have to accept that and help it grow up.
So I guess on a more esoteric level than Shu, is there, for those folks in the pipeline, are there enough examples for them to follow? I think when we all sort of start our careers or choose our careers, I think a lot of us can sort of point to times where we look at someone who looks like us or sounds like us and we say, okay, I can do that. I can do what he or she is doing. Do we have enough of those examples out there right now for Black entrepreneurs to look to where they feel comfortable not only pursuing it, but feeling like that they can succeed at it?
Yeah, examples matter. So we call that Lighthouse Companies. And we have a few that we're investing in purely for the purpose of providing examples to some of the younger companies. So we have some more proven companies in the portfolio. We're courting some proven companies to try to get them in the portfolio, not because they can't raise money elsewhere, but because we need examples for others in that community. And the goal really is to build a community that is vulnerable with each other, that can learn from each other, that can overcome together.
And also
Jemma,
just
your
to add
thoughts on
to
that?
that, this year, actually over a year in the making, we ran our first Black and Latinx entrepreneur cohort. And I think it speaks to both sides of that because, first of all, it was an incredibly competitive process. We heard from over 400 different companies, and we really enjoyed the process of reading all of the applications and learning about the businesses. And we ultimately selected 14, and they participated in an 8-week experience with Goldman Sachs. And the whole thing was actually designed with founder input. And so even before COVID, it was all designed to be virtual. We heard from a lot of founders that what I really need to be doing is focusing on my business, but getting access to the Goldman Sachs network, getting access to the other founders in the cohort, and also getting access to founders who came before me and have already gone through this process would be incredibly valuable. And so we ran an 8-week experience with these 14 companies. And the great thing is that we're now talking to them all the time. So these companies are now part of our network, and we're looking forward to doing more.
And so once we start seeing more then of those success stories, then do you start to envision a little bit more exponential growth and not only the folks coming out of that pipeline, but the amount of money committed to it? I mean, 500 million is a lot of money, 100 million is a lot of money. There are a lot of people that would say, why not $1 billion? Why not 5 billion? Shu?
It's not a lot of money. So it actually isn't in the venture world, but it's important to show success. That is the most important thing. If we overextend ourselves and fail, we have done a huge disservice to much more than SoftBank. So the goal is to start with a targeted amount of money, prove that this idea has financial merit, and grow from there. So we really want to show proof points in terms of returns, and that's why we started at the size we have. But the goal in 3 or 5 years is to have a lot more capital dedicated to these folks.
And Shu, just to be clear, and when you're judging success, I mean, what metric are you primarily looking at?
Returns. 100 million turns into X 100 million. And the bigger the X, the better for you.
Jemma?
I completely agree. I think one of the things that we're focused on is doing this with others. And so we now have clients calling us interested in, well, how should I think about this in my portfolio and how can I support entrepreneurs? And so I'm very confident that that number will grow. And I completely agree with Shu that we need to see the outcomes and drive results. And I think the more success stories that you see with entrepreneurs growing and scaling businesses, their employees go on and they start businesses and they start investing in other companies. And so there really is an ecosystem effect here that will all only benefit if we keep doing this and if we keep focusing on finding the right opportunities.